morning, everybody. Welcome to the show. Today is February 1st. It is the brand new start of a month. It's a Wednesday, and it's also the big bad FOMC day. We're going to be getting the Fed funds rate hike announcement around 2 in the afternoon today, and the press conference to follow from Jerome Powell at roughly 2:30. Very likely, as we pointed out in yesterday's stream, that the market is correct in pricing in 25 basis points. The market has never, I shouldn't say never, but the market has almost never gotten it wrong under Jerome Powell's watch here. And you know, that's saying something about the transparency of Powell and his path forward. Now, could this be the moment for him to sort of stick it to the market and say, I'm going to be like Volcker, as we discussed yesterday? It's certainly his opportunity to do so. Everybody's under the assumption that the 25 basis point rate hike will be the rate hike. Everybody thinks that this is kind of it. We're going to hold after this, and if he comes out and does something contrary, that will be his Volcker moment. Completely shocking the market. What that would do would actually be quite incredible for the Fed. He would build some credibility there, but it might cause too much damage to our markets at this point. I don't know. So we'll see. Once again, we are not positioning early for Powell at 2 o'clock. We're not positioning early for the announcement, not positioning early for the press conference. Just doesn't make sense to do so. There's too much volatility. I would say that the risk is to the downside after yesterday's rally. That we're elevated high on the trend structure right now. So of course the risk is for a pullback to the downside. So knowing that, if anything, maybe there's a short to be had. But again, I want to be very clear. Just because I literally just mentioned that does not mean that I will take that position. I will be flat at 159. I'll make sure that nothing is on the table. Nothing's on the table. Okay. So that's the big deal, of course. Early in the morning, we'll still be getting some pretty important economic data. At 10 o'clock, you can see here, we get manufacturing PMI and JOLTS job openings, which is a really important data point that the Fed watches. Very rare. I'm fairly certain that JOLTS typically comes out before the market open at like 8:30. That's usually an 8:30 announcement. The fact that it's at 10 a.m. this morning, kind of interesting, ahead of the FOMC. So anyways, I'm sure they just want to get all of the data out that the Fed is considering. The Fed probably knows all of these numbers. Oops, I hate when that happens. Oops, I hate when that happens too. What's going on here? Losing control of my little pointer. There we are. The Fed probably knows kind of where these numbers stand already as well. So that should be taken into account when the statement and the Fed funds rate sort of comes out here. So things to be mindful of, all right? Volatility today. Volatility should be a wild one. Buckle up for 10 a.m. 10 a.m. As soon as these numbers come out, the sentiment around the rate hike may change. As of right now, I believe there's about like a 99% chance that the market is pricing in the 25 basis point rate hike. As a matter of fact, I'm going to bring that up on another tab and drag it over in just a moment. So bear with me as I pull up our Fed tracker tool. And the answer is, 99.3% chance. 99.3% chance. Let's bring that over here. And we'll zoom out a little bit. There we go. Today's meeting, February 1st, 99.3% chance that we get a 25 basis point rate hike, going from a target rate of 425 to 450 to 450 to 475. About a 0.7% chance of no hike at all. So very, very little chance of that, right? Anyways, that's what the tracker's telling us. That's what we've got on the calendar here. As we just pointed out, into the end of the week, we're going to continue to get some pretty important data. We've got hourly earnings, we've got non-farm payroll, unemployment rate, and PMI for services on Friday. All right, that is what we've got on the calendar from an economic data perspective. Let's see what the stock-specific headlines are looking like here on this morning's session. Dow futures fall as traders await the Federal Reserve's latest rate hike decision. I wouldn't say that they fall. They're not falling all that aggressively. Maybe the Dow futures are, but the ES is not down massively. We're just kind of inside the prior day's range last I checked. Private payroll growth slowed to 106,000 in January as weather hit hiring, ADP says. That's kind of a forecast for the public sector, right? Or the regular non-farm, non-ADP, I should say. Peloton losses narrow as the subscription revenue outpaces equipment sales during the holiday quarter. Michael Burry tweets one word of advice before the big Fed meeting. I'm not sure if everybody saw this, but the word he tweeted was sell. Quite literally, the man is so cryptic. It's unbelievable. Unbelievable. I don't know how people read into the things he says or what he does. It's like he had his one big moment in time, and now he's just kind of like, I don't know. If you're always calling for a short in the market, you'll get it right every now and then. But to be consistently calling for a short all the time, it's like, come on, man. The market typically trends up, especially equity markets. It's a different idea with the whole subprime lending thing that he understood with the housing bubble. But anyways, people consider him a legend. He's definitely a legend for what he did, but going forward, I think he's had some pretty off calls recently. What else? Mortgage demand, speaking of, took a big step back last week, even after interest rates fell further. Ironically enough, in the local market, real estate market where I'm at, I've seen houses that were just listed over the last maybe 3, 4, 5 days that are well above what I figured they would list for. We're talking like, 2 families that are going for, typically in the area that they are around, I would expect like 450, 425. They were listing at 519, 550, like well over 500K. And I was just like, doesn't seem like that's, reflective of the market environment we're in. Maybe I'm wrong, but it seemed aggressive. So I'm going to continue to watch our local market here. Real estate's very, very localized. Every market's different, but overall, I'm seeing, still some strength in the markets near me. What else do we see? Of course, this made a lot of Twitter headlines yesterday as well. Jim Cramer says we're in a new bull market, so buy on the dip. Everybody was like, okay, that's it. Bull market's over. We're going to zero. Fed's going to, do something dramatic tomorrow. So inverse Cramer, let's see if it's a sell. And Michael Burry's right. Maybe. We'll see. Biggest movers pre-market look to be earnings candidates. Right here, we'll look at the earnings calendar in just a second. There's another one. Snap shares plunge on weak revenue as digital ad struggles continue. Earnings candidate there. Why AMD is faring much better than Intel in the same tough economy. Intel is kind of like Intel's, what would you say? Intel is like, respect your elders, right? Intel is an elder of the tech company, of the tech world. AMD, young buck, right? Young and spry. So I would expect it to do better anyhow. More Adani stuff versus Hindenburg. Going to see how that lawsuit pans out, if one ever comes out. What else? Iron ore prices could rally as one leading producer remains reluctant to share. That's inflationary, obviously, so no bueno there. Some ice storms in Texas. Google asking employees to test potential ChatGPT competitors, including chatbot Apprentice Bard. I've never heard of this. I don't know if the chat has heard of this, but yeah, I think Google's in a tough spot. ChatGPT could easily be the next wave of what replaces the Google search function. If you could just get a very, very specific, answer and reply from ChatGPT, why would you Google anything anymore? You just ask ChatGPT, and it gives you a well thought out response. Now, if you're looking for an article, obviously it's a different story. But if you're just looking to learn a small piece of information and you don't want to sift through Google's different articles that it recommends, ChatGPT is the way to go, right? So there's definitely some friction probably between Google and Microsoft now investing massively in ChatGPT through OpenAI. Interesting dynamic in the tech world. I don't know if there's Google was a paradigm shift, right? The fact that I don't know when that came to prominence, but it's like, oh, just Google it. What was that? Mid 2000s, right? If you need an answer, oh, just Google it. Is the world going to have a paradigm shift again to, oh, just chat GPT it? Just GPT it, right? That's kind of the next that's the next thing. All right, gold demand surged to an 11-year high in 2022 with the colossal central bank buying. AMD beats on Q4 earnings, right? We just saw that. Goldman downgrades Funko, cites risks to toy makers' long-term growth plans. They had their moment. I don't know if they're going to continue to have their moment as like a collector's item, but I always thought that the toy space is a little bit interesting. And we saw some interesting headlines, to say the least, from Hasbro, the way that things were going there. CNBC made an interesting comment about adults who collect toys, right? So I don't know. It is what it is. It's a niche industry for sure. What else do we see? Amazon layoffs hit workers in robotics, grocery, health, and AWS divisions. So continued struggles there. So interestingly enough, you guys know I was in Seattle the past, 2 weeks ago now. I saw these Amazon Dome things. Very, very cool. Very, very cool. I'm sure people who live in Seattle are like, yeah, we walk by it every day. It is what it is. But very cool for an outsider to see these glass, geodomes with all the greenery inside. It was fantastic. Very, very cool. It was a spot of brightness, so to speak, in the very gray skies of Seattle. Anyways, Meta Technology Chief, Bosworth implies that the company has lost focus, thinking that they're spread too thin, right? They've got the whole metaverse thing going on. I don't know what else in terms of company initiatives they have, but obviously the platform itself is big. Instagram, they're spread very thin. And they're certainly, it doesn't seem, maybe I should reel that statement back a little bit. If the next frontier of tech is kind of this AI push that we're seeing from Microsoft and Google following suit here, where's Meta's sort of involvement in that? Probably has something to do with the metaverse, of course, but we just haven't heard too many things about that anyways. So that's kind of the headlines for the morning. Let's take a look at our earnings calendar. What do we see over here after the close yesterday? AMD, Snapchat, we just saw those guys on our headlines. We also saw Electronic Arts as a pre-market mover there. Before the open, WM and Altria, right? Those are important. Peloton we saw as well making news on the headlines. Meta after the close. If we just saw statements that said that they lost focus, I would imagine that there's something in the earnings statement, from the technology chief to sort of realign, right? And ironically enough, whenever companies talk about losing focus, it's a good opportunity to, continue to lay off folks, rehone the mission of the company, and set forward on a new path. So I wouldn't be surprised to see more layoff headlines from Meta as well, based on that sort of tone. What else do we see? After the close so that's after the close today. After the close Thursday, big boys report, Amazon, Apple, Alphabet, Qualcomm as well. Starbucks might be worth watching. United States Steel, definitely worth watching. A couple of other healthcare things like Gilead. We'll be getting our Merrick before the open on Thursday. Eli Lilly, Bristol Myers Squibb, right? So there's some very important names that are still going to be reporting throughout the course of this week. Keep an open mind. The main area to watch is these three right here. Let's take a look at what we do best, which is, of course, our ES futures. What do we see here from a 4-hour price action structure perspective? We will dive right into the ES 4-hour chart in just a moment, only after we see who is here in the chat. Going all the way up to the very top of the list, we've got INF kicking us off. Good morning. The based homie from Canada is here and up first in the chat. Nice to see you this morning. Hopefully work has not been too bad up in Canada. I know we're in for a very cold spell over the next couple of days. It's supposed to reach negative 20s here in New England. I believe it's Friday night. Friday night? Tonight? One of the nights. Thursday night, Friday night, something like that. We're reaching down into negative 20, negative 15. Not going to be too pleasant. John Cardozo, Kaysway, Nick Farrell, Bluefish Aquariums, Double Dummy, Almost Davy Day Trader. We've got Inza, Ketchup King, Sanket, Dwayne, Killaherb, Rug Pull, Jeep for Life, Mona Makes More, Orion Speed, Roger Tut, Luis. We've got Frazier, Ann Rando, The Real Toto Fan, Forbes List. We've got Eric Bartley, Barty, excuse me. We've got Sharath, K. DeLeon, Rebecca F., Chloe, New to Stock, Tiff, Starlight, Steve Valois, Cipriano, Leaf Floating on a Lake, Philip Philip M. Apologies. Sip of water. Wrong pipe. Man, I was on a roll there too with the names. Belbo, Headwing, Lexi B, Executioner, Jay with the Gold Cash Bag. Looking for just some green names now. Kevin Weston. We've got Lord Trader. Who else? Stevie J. Infornity. Bert Wofford. Siege is in the building. What else? Crypto Commando. Ty. Who else? Michael Opal. We've got the Sandman, M. Leonard, and that is that. All right, so 4-hour time frame chart. Yes, what do we see here from a technical perspective? The uptrend remains intact, folks. We have ourselves lows. We've got ourselves higher lows, higher lows, higher lows, higher lows from yesterday. This was kind of nice that the market respected our wishes to some degree, holding on to the ideal higher low on a break and retest of this prior area right here. We did adjust it slightly higher. The number that we had been tracking for the past few days has been 40.20. I do want to let you know I've adjusted that slightly higher to reflect the intraday low from both the Monday and then yesterday, Tuesday session as well. We'll see that on the hourly chart in just a moment. But of course, I want to reference the highs here. We've got ourselves equal highs. We are technically positioned for some sort of break of those equal highs, and that would be reasonable to search for the next higher high in our 4-hour trend structure. And that would, of course, be bullish. We had a screaming rally yesterday into the close, big spike. Spike rules are in play. We'll see that in just a moment on our market profile chart. But for the most part, the uptrend here on the 4-hour, certainly intact. No concerns from a trend perspective here. Now, of course, we have the uncertainties, so to speak, of the 10 a.m. JOLTS numbers. Oops, that's 10 a.m. 10 a.m. JOLTS numbers, as well as the 2 p.m. FOMC. So none of this stuff goes away just because the structure is fine, just because it looks like a good, decent, long, solid move here. Doesn't mean that we can't do something on the contrary when the data comes out. So let's go on down to the hourly time frame chart. And that's just another reason to be open and flexible around both 10 a.m. and 2 p.m. on today's session. So hourly time frame chart. Let's use the zoom tool here instead of clicking and dragging like a madman. All right, there we go. So isolating the price action to this kind of view, you can certainly get the sense that we have lows, higher lows were found on yesterday's session. I mentioned wanting to look at only the regular trading hour session. And what you'll notice is, again, I've adjusted ever so slightly our gray bar from 40.20 up about 10 points to 40.30. Notice that it captures these prior highs, gets this area a little bit. It also gets the gap close from last Thursday, yesterday's, Monday's low and the prior day's low, basically where we opened right here. So 40.30 looks to be the more accurate level at this point in time that I would want to see hold from a structural perspective if we see some sort of pullback and we're going to stay in some sort of bull flag. Okay, if we break down underneath that, the 4-hour chart could probably afford a higher low here, but obviously some concerns start to develop on the hourly chart where then you would look for a lower high underneath this zone, and that of course becomes concerning. So in a picture-perfect world, if the market's going to remain beautifully bullish, no problems whatsoever, we'll either make a new higher high today, a new higher high, or we'll pull back and respect 40.30 and not get underneath that level. Okay, so if you're a bull and you want this market to hold up in a picture-perfect manner, higher high or respect of 40.30. Those are the two outcomes for the bulls. It, of course, would imply that we can pull back in the first place, but with the FOMC at 2 p.m., I don't know that we're going to be contained nice and respectfully at this level. So that is, of course, the question. Do we make a higher high before? Do we pull back? Do we respect it? Right? These are the things that we're starting to think about for today's session. Let's go ahead and turn our extended hours back on, and just any other questions, comments, not questions, but any other things to note from the hourly perspective. Nothing crazy. I would just say that obviously there's the spike into the close. And so far, all of the acceptance in the pre-market has been above and also been roughly above the highs of the Monday session as well. So it does strike me as being more bullish than bearish in the pre-market structure here. But as we typically do, let's just drill it on down to the 15-minute time frame chart and make some assessments on the smaller time frames here. Getting a little bit more granular with our analysis. Of course, spike rules will be in play. We'll talk about spike rules in just a moment. But for now, walking through the three questions. Number one, where are we opening in relationship to the prior day's range? Here's the high, here is the low. We're certainly opening inside of the prior day's range, so that is a balanced and neutral indication. Whenever we have that, we go to question 1.5, which is where are we opening in relationship to the value area? Here's value area low, here's value area high. It's overlapping basically with the prior high of day, right around 40.90. 40.90 is your value area high. You could round up and just call it the high of day, 40.9125. 40.90, this area is your value area high regardless. We are opening inside of the value area as well, which once again is a balanced indication. Now, if you recall, yesterday we had the same scenario with the Monday session, right? And what did we find? We found ourselves a nice opening range and then we broke out of it, right? Boom, there we go. Higher low pullback. It was off to the races for the rest of the day. So it doesn't have to happen exactly like this, but this yesterday was a really great example of how question 1 and 1.5 work, right? If we're inside the prior day's range, if we're inside of value, then the market should be content just going back and forth, going sideways until some sort of initiative type move unfolds. So what would I expect this morning? Well, number one, exercise patience because we're opening inside the prior day's range. Exercise patience because we're opening inside the value area. The market's content here. So opening range that does something like this and then breaks or breaks. Fantastic. That appears to be the tradable move for this morning session. But before we get ahead of ourselves, let's talk about question number 2 and 3. So question 2, where are we opening in relationship to the overnight range? Here's the low, here is the high, smack in the midpoint of the overnight range. So another balanced indication. We don't have good risk reward at the overnight low. We don't have good risk reward up at the overnight high. Balanced, patience, not looking for anything aggressive on the open. Question number 3, last but certainly not least, what is the position of the overnight inventory? To do that, you just extrapolate the settling print, which is right here. How much time was spent above versus how much time was spent below? What you'll notice is that almost all of the activity is underneath the closing print from the 4:15 session there on yesterday's session. So we're slightly net short. Let's go ahead and say that we're probably, 85% net short? 85% net short. The reason I wouldn't say it's 100% net short is because, sure, there's some activity above here, but look at how back and forth here, here. I mean, it's not like we've just drilled straight down in the overnight session. So I would say, yes, it is net short because we are underneath, spent more time underneath the prior day's settling price, but it's not so net short that we're 100%, so to speak. And regardless, whenever we're talking about this in the context of question 1 and 1.5 that are balanced, doesn't really mean all that much, right? We're not expecting shock and awe. There's no knee-jerk reaction. Nobody went out short yesterday and is like, oh goodness, we're so far removed from the prior day's close that I've got to do something. Nobody went out long yesterday who said, oh goodness, we're so far removed from the close that we've got to do something. So knowing that, I think it's fair to say, so take a quick mental snapshot of our 3 questions and their answers. I think it's fair to say P for patience on the open is suggested. We're waiting for some sort of opening range, break the top and go, break the bottom and go. As we know, we can get the fake moves, which are even more powerful. You've got trapped longs, trapped shorts, right? But let's talk about spikes because this is clearly a spike. And for those of you who don't know what spike is in reference to, let's go over to the market profile because this is truly where it comes from. Not the candle chart, but the market profile chart. For folks who always ask where the value areas come from, this is where the value areas come from. You can see the shaded area in yellow here represents the value area. It's where 70% of the day's trading volume took place. But clear as day is this M period spike. So into the close, we saw a massive push in the upward direction. It's called a spike, and it's basically an indication that, hey, we don't know if these prices are fair. We don't know if the prices in this spike area are fair. The reason we don't know that if they're fair or not is because the market only stopped trending higher because the bell rang at 4 o'clock. The market closed, right? That's the only reason why we don't know if these prices are fair. Could the market have continued to move higher? Absolutely. Could the market have pulled back and found sellers there? Absolutely. But we just don't know what would have happened because the market closed at 4 o'clock. So knowing that, we can apply some rules to this spike area. Here we go. This is the spike here. If we open in the spike, which as of right now is where we're slated to be opening, this orange line represents the current trading price in the ES. If we open inside the spike, we're looking for two-sided trade to resume, and we will learn something as we break underneath the spike base or over the spike high. The spike base, I'll give you the number here on the ES, is 40.7550. 40.7550 right here. 40.75.5. All right, so if we break down underneath that today, I would say that it's a slightly more bearish indication, noting that these spike prices were not fair value and buyers did not find acceptance there. Sellers stepped up, pushed prices lower. If we break the top, it's just the prior high of day. We talked about 40.90. Obviously, we're looking for that next higher high on our ES 4-hour time frame chart. That, of course, would be bullish. If we open underneath the spike, which we're threatening to do as we're trading around this area, right? If we open underneath the spike somewhere in here, it would just be blatant rejection of those higher prices, and you're looking for 40, 75, 50 to turn into resistance on a back test, right? For something that does this. That's how you would use the spike. If we can't stay in these prices, it's an indication that sellers stepped up, buyers not holding it there in the pre-market, and now we should look for it to act as resistance, 40, 75, 50. All right. If we open above the spike, I'm just going to walk through the above case just so you know this, so you have it in your back pocket, so to speak, if you ever see it unfolding. Doesn't look to be likely based on where the current orange line is down here. But if we ever open above a spike, it's just an indication that we need to continue to auction in the upward direction until we find more sellers. And the same can be true but opposite at the lows if we have an M period spike at the bottom of any given market profile. Okay? So that is a lesson in profile. That is what we're watching in terms of spike rules. As of right now, I would say the key inflection point is just right here, 40, 75, 50. 40, 75, 50, and we're opening quite literally on the level. So we'll check in closer to the bell at 9:30, of course, but that's something to consider for today's session. All right? Overnight low is probably going to, because this is stacked up right around that area, overnight low may act as the sort of gatekeeper. You might dribble a little bit lower and bounce, and then, technically we're still kind of trading around that spike, but that's the general idea here. That's the general idea, okay? So ES, let's walk through some scenarios. We talked about, opening range, something that does this. If we break down and violate the spike, right? So if we're underneath the overnight low, what's the target? Value area low. Value area low, the pullback area from here after the break of the opening range from yesterday, right? So holding that would be bullish. It would offer up an hourly higher low above that 40-30 zone that we just discussed. So buyers, if you want to see a picture perfect scenario, it's a hold here for a big reversal that then makes a new higher high. All right, that's the bullish pullback. If it's a neutral pullback, it would be an equal low. So opening range, breakdown gets you to here. And then a bounce, that's a little bit more neutral, right? We know we're making an equal low to the prior pullback here and from what we saw on Monday's lows as well, right? So this would not be picture perfect for the hourly bulls. Hourly bulls want to see a higher low above the prior low of day. Those are if we break down, right, and do something that looks like this. If we move higher, if we break out of an opening range, as we just pointed out, we're achieving that 4-hour and that hourly higher high. Uptrend remains intact. We can then afford some sort of higher low pullback and continue on our merry way. Okay, so in terms of the upper level where we might find that next rejection point, the big structure on the ES is closer to 41.30. 41.30, that's about a 60-point rip from here, right? So 60 points. What am I saying? It depends. If you count from 40.80 to 41.40, there's of course your 60 points. Or you could just count from 40.90, prior high of day, this area right here, 40.90, up to 41.30, that's just 40 points. Okay? So it depends on how you want to count it, but you've got some serious overhead range to be trading for if we get a break and some sort of higher high. Remember though, that, we're getting like we've just talked about a very clean analysis. So let's bring it back to reality here, right? Let's snap back to reality. Up there goes gravity. Any Eminem fans in the chat? Anyways, so bringing it back to reality, we just talked about a picture-perfect plan. Maybe this happens, and that's your bullish higher low on the hourly chart. This happens, and that's your neutral equal low on the hourly chart. This happens, we go to 40.90. That's a beautiful higher high on the hourly chart. This does not account for the fact that at 10 o'clock, we're getting jolts. This does not account for the fact that at 2 p.m., we're getting the FOMC. All right? So, we just outlined a fairly straightforward plan. It's subject to go right out the window at either of these time slots. Okay? Any of these time slots, out the window that analysis goes and, be open to some market volatility. So I'd love to say that the market will play nice today, but I don't think it will. So that's what I've got for you in the ES in terms of the scenarios and levels that I would want to be mindful of. We are still in let's boil it back down to the basics as well. We are still in a 4-hour uptrend. We are still in a 1-hour uptrend. The 15-minute chart looks good. We've respected a clean pullback area. It's technically looking more bullish than bearish. The risk is to the downside if there's any bearish interpretations of hawkish comments from Powell today at 2:30. I would say the risk is to the downside on a pullback, but anything can happen at 2. So structure underneath us looks solid. Everything looks good to go. Unfortunately, I just don't know that we can be so confident in those types of structures. Hang on one second, guys. Very odd. Very, very odd. Whoop, there goes my microphone. So hang on another second as I redo this. Jesus. Oh, boy. All right. Microphone's back. That's good. I went to adjust it, and it came out of its little post. But so someone I've never seen before, never seen the vehicle, never seen the person, and I mean, ironically enough, wearing a black hoodie, which I have nothing against black hoodies. I own plenty of them myself, but runs up to my mailbox, stuffs something in it. Never seen this person, never seen the car. Hood's up. I get it. It's cold outside. But what do you do? What are you doing at my mailbox? Like I've got a great view of my driveway and mailbox from the office here where I have my setup. And just, if you ever see someone running out of a car to your mailbox to stuff something in it and then run away, it always catches your attention. So I have no idea what that was all about. But yeah, no, they put something in the mailbox and drove off. And that is that. So I'm not. It could be an Amazon. I didn't buy anything from Amazon, but anyways, it always catches your attention when something like that happens. I'm not fearing for my safety. Let me be very clear about that. Let me be very clear. I'm not fearing for my safety right now. It just like catches you off guard, right? Like, what the heck are you doing? It's probably something very innocent. I'll let you guys know. It could be, someone throwing an ad in the mailbox, say, "Hey, we're interested in buying your home." Some real estate investor paid this guy, $20 an hour to go hand out all these mailers and stuff them in. So, anyways, all right, back to markets now that that's sort of unfolded. We were just saying that the structure is solid underneath us on the 4 hour, on the 1 hour, all good. Things look great, but we're open to volatility at 2 p.m. So hopefully I didn't side rail the chat too much with that little aside there. But again, really caught me off guard for a second. So we've covered the ES. Let's take our poll. Let's take the official clickable YouTube poll. If you guys are bullish and you think we're going to go opening range, minor pullback, and then break the highs and rally up to that 4140 area, 4130 area, let's see a number 1 in the chat. If you're a little bit more neutral, thinking that we go opening range, breakdown, high or low off the value area, something like this. And by the way, folks, all of these situations that we're drawing in are pre-FOMC announcement. Everything's subject to go out the window at 2 o'clock. So if you're a little bit more neutral ahead of the FOMC, thinking that we go sideways here, number 2 will suffice. And then if you think we go opening range, breakdown, lower high under the value area, tag the prior low of day, possibly threaten a breakdown here. Let's see a number 3 in the chat. That is a hideous looking 3. Let's try that again. There we go. Let's see a number 3 in the chat. And of course, for those folks who are unsure, a number 4 will suffice. That is our ostrich option. All right. Let me type in the official. That's again the clickable YouTube poll. Let's go. What do you think? Question marks. 1 bull, 2 newt. We'll go number 3 bear, 4 ostrich. All right, clickable poll is out there in the world, so you can click on that if you're a lurker and prefer not to speak up in the chat. I'm going to scroll up a little bit further and see what else we've got. What else do we have here? Starlight's in the building. Raz is in the building. Good morning, Gregory Rulo. What else? Stay warm, hug a moose from the Canadian Tourist Council from Crypto Commando. Good morning, George. George P, that is. Nice to see you. I like that, Sharath. Sharath says it's a me kind of day. MEEE. 3 E's there. Manage entries, exits, expectations. Yes. That's cool. I like that. It's a me kind of day. What else? Questions, comments, concerns. Neighbor Jay's in the building. Lock the doors. Yeah, no, we're all set with the mail drop off. I'll check that thing out. I'll keep you guys posted. Open it with a stick. Very suspicious. Cold weather mail runner. Yeah, something like that. No, I didn't get the license plate number. Maybe the Ring will pick it up. Maybe the video Ring monitor or whatever will pick it up. But all right. With that, we're back to business with some chat responses. So Harry St. Louis is in the chat as well. Nice to see you, Harry. We've got 1s and 2s, 3s. We've got the full gamut coming into the chat here, which is completely understandable on a day like today. I would say that there are a lot of 2s, though. A lot of 2s until FOMC. A couple of 4s as well. But for the most part, definitely more 2s than anything else on today's session, it seems. Yeah, fishable, clickable poll. Yeah. So, yeah, chat seems to be thinking number 2. I think that that's completely reasonable as we head in limbo for 2 p.m., quite literally, and Jerome Powell to start speaking at 2:30, and then we'll see some volatility. I would say that the market's positioned here slightly more bullish than bearish, as we talked about with the spike rules. Opening in this spike is definitely an opportunity for the buyers to sort of hold these prices and prove that, yes, the market does want to auction higher. Right, so that's something to at least consider as we move forward here, is where we're opening in relationship to the spike. Right, we had a very bullish day yesterday, and we're opening towards those highs. That, of course, is always going to be more bullish. You open in the upper third, you open towards the highs, definitely more bullish than bearish. Okay, so that is your ES analysis. Thank you guys for sticking with me through it. Thanks for sticking through the side rail there on the commentary. But let's move along. Let's keep this show on the road. NQ. What's going on with the NQ 4-hour time frame chart, moving from the top down? Let's see what we have here on the higher time frames. NQ 4-hour chart. What do we see? Structure is definitely still bullish. We've got lows, higher lows, higher lows, higher lows. I mean, so on and so forth. Continuing to find all of these beautiful higher lows. It looks great. The structure underneath us is solid from a trend perspective. We've been getting some give and take, give and take, give and take, give and take, which is always what we want to see. Markets do not like to move in straight lines. So the fact that we are getting the give and take does strike me as being healthy for an uptrend to be forming. Now, the interesting part about this is that we are not quite at the equal high like the ES is. We're slightly shy of it, okay? So the NQ has the opportunity at least for a lower high here, and then we would look for a pullback or something that does this. Maybe it's a deeper 4-hour pullback this time around. Like this, I would count as a deeper pullback as compared to this, because this is only one day of selling, and it hardly took us to this prior structure, right? Whereas this, it would have been the equivalent of something that did this, okay? So that's the difference. Maybe there's a little bit of a deeper pullback that starts to unfold here. As long as the 4-hour chart finds a higher low, kind of above this 11,750 area, this prior high here, good to go, good to go. So 4-hour chart does look bullish, looking for that continuation in the upward direction to make the equal high around 12.2. Let's continue on down to the hourly time frame chart and have a look at what's going on over here. When isolating the price action to a view that looks like this, you can certainly see that we had the beautiful retest of this prior breakout point here. Prior day's low, yesterday's low. It's all there, right? So 11,975 roughly. We're just going to round off. Let me show you that with the extended hours off so you can see just how pretty it is. Look at your prior rejections, gap fill area here, prior low from Monday. It's where we rally from yesterday, okay? Beautiful. So structurally speaking, the hourly chart looks fantastic as well here. Let's go on back to our extended hours, make sure we're not missing anything. As we just pointed out in the ES, we're consolidating in the overnight session above our key breakout point from the early morning session yesterday. So let's just go down to the 15-minute chart, make sure that we can see things clearly here as well. I can see clearly now, right? The rain has fallen. 2 musical references in the same day. Let's look at that. So opening range gets your breakout, right? Higher low pullback and off to the races. Notice that the spike is not as clear here in the NQ. The spike is not as clear because it starts, not equal to these highs. It starts underneath, And we also, the ES does have that pullback as well, but the spike range is a little bit smaller, right? And all that's to say is we're still opening in the spike, which is definitely a little bit more bullish than bearish. The three questions very similar to the ES. We've got low and high. We're opening inside the prior day's range. We are opening above the value area though. So that's a little bit more bullish here. We're opening inside the spike. So spike rule number 2 is in play. We will learn something on the break of the prior high of day, or we will learn something underneath the value area high, because this quite literally represents the bottom of the spike. So I would say you probably want to be patient on your NQ until we take out value area high or prior high of day. One of those two levels. So you've got 12,155, prior high of day, 12,155, or value area high, 12,128, 12,128. So opening range, bullish break here. You're looking for the equal high, right? I don't think we'll be able to see it on our 15-minute chart with just 2 days. Let's grab 5. So on the break of the prior high of day, break of the overnight high, this zone here, you're looking for the rotation to the equal high, much closer to 12,300 roughly. This set right here. This gray bar, it did act as a little bit of rejection right here, but we ended up moving right through it cleanly. So I'm not sure I would just, throw all my eggs in one basket on a short at 12,200, right? I would search for that equal high. And then on the breakdown, right, if we take out value area high on the downside, what would we look for there? Probably just the overnight low. And the reason I would say overnight low is because you have structure here, right? Rejection, rejection, break, retest, and rally into the close. Overnight low is the same area. So boom, breakdown gets you there. These are just quick scalps, guys. These are just quick scalps ahead of the 2 p.m. FOMC announcement, okay? So that's kind of the roadmap for the NQ and what I would be thinking about there. Anything underneath the overnight low, of course, you could just look for continuation to the full value area rotation, value area low, and that's also your opening range high from yesterday. Opening range was right here. The high and the breakout point is your value area low. So that would be the target. Okay, so just walk the levels down quite literally one by one. It's as simple as that with the structure and how things are unfolding. And once again, these are probably scalps ahead of the 2 p.m. announcement. All right, that's the NQ roadmap, very similar to the ES in terms of structure and thinking. The only difference is that we don't so much have the equal highs here that we're gunning for. All right, let's take a look at the Russell 4-hour chart. Let's have a peek here. 4-hour chart did make the new higher high yesterday. Oops, what's going on with the zoom? Try that one more time. Made the new higher high here above this rejection point, and we know that represents the top of the range here. So we're outside of that range in the upward direction. Definitely more bullish than bearish, being a risk-on gauge here. Strikes me as risk-on, right? Very difficult to say that the Russell is bearish at this point in time. Let's go to the hourly chart. And we're actually behind on time today, guys. We've got 9:15 on the clock, so I got to speed it up here just a little bit. Russell's opening in the spike. It's above the prior range highs here. If we isolate the hourly structure to this, no doubt about it, we've got lows, higher lows, higher lows. We've got, most importantly, right, highs, higher highs, higher highs, higher highs. We can afford some sort of higher low pullback. Anything that really stays over the prior low of day, fine. No issues here in the Russell. Let's move on down to the 15-minute time frame chart. And we'll keep this thing moving right along. What do we see here? Again, inside the spike. Here's the spike. Anything that stays over, what's the number? Anything that stays over 1933.8, 1933.8. Again, you might want to just use the overnight low since we've traded there more recently. Anything that stays over the overnight low is bullish, looking for breakouts over the prior high of day. Continuation. The market is getting a little extended here, so be mindful that you're buying a higher high on the Russell instead of the equal high break or the higher low pullback. All right, so we are in an uptrend. We are looking for bullish outcomes here, but your risk should be, you should start to think about, okay, are we getting overextended on the rut if we continue to push over the prior high of day? That's what I'd be mindful of here in RTY. If we do pull back, breaking the overnight low obviously opens the door to the value area low as well, and where the rally really paused. You can see, look at this from a candle perspective, right? If the candles are telling you a story, this large aggressive move here is clearly different in tone from what happens here. All right, so the fact that this is where it stopped, value area low, that to me would become a target, right? There's an inflection point here is what we're getting at. All right, and it's also the top of the 4-hour range, the original 4-hour range, right? The original 4-hour range is right here, 1920, this general area, general zone. So bullish across the indexes. Things are looking quite solid there. Let's go ahead and have a look at our pre-market ETF indexes as well. I'll give you the numbers in the SPY, Qs, and IWM. If you are going to tune out, that's A-okay. I get it. Do me a favor, hit the thumbs up button on your way out. Greatly appreciate that. We're not near the upper edge of the weekly expected move yet, and that's because of the volatility that was priced in from the J-Pow announcement, from earnings season, from all of the economic data that we're getting this week, JOLTS, services PMI, unemployment claims, ADP, everything, right? It's all being priced in via the expected move. We're not up towards the top yet, and we're not up or down towards the bottom yet either. We're actually fairly neutral, almost in the midpoint of the expected range. So there's still plenty of range for this market to move and still be comfortable from an options hedging perspective. Okay, so be mindful of that. If we do see a breakout, you might want to go with it, right? There's nothing saying that we're too far extended. Now, I'd be mindful of 410, and if we break down, I would be mindful of just prior day's lows, right? This is in reference to what happens at 2 p.m. Anyways, for this morning's open on the SPY, we covered the ES already. For this morning's open, your spike low, your spike base is 404.80. 404.80, and that's your pre-market low as well in the SPY. So I would watch 404.80. If we're above 404.80, looking for continued bullish outcomes in the SPY. If we break down underneath, lower highs underneath confirm the spike as rejected prices from the buyers. Look for a rotation lower, right? Look for a rotation lower. On the move over the high of day here, 406.50s, again, 410 becomes the target. We know on the weekly time frame chart, we need a higher high over 410 to confirm a new weekly uptrend. And on the monthly time frame chart, a break of 410 is a break of the inverted head and shoulders neckline, right? Inverted head and shoulders neckline. So bullish things are set to happen over 410. Bullish things are set to happen over 410. Could we pull back after we get the break? So something that does this? Yes. But, in the grand scheme of things, higher time frame charts really want to see price over 410. Okay, so SPY, 410, very important level on today's session, and the overnight low and spike base at 404.80, also very important. Let's move along, QQQ. What's going on in the Qs? Having a peek over here, getting a little bit of congestion, which is actually, not the end of the world. If you start thinking about this as an opportunity to build out a bull flag, again, Powell at 2 p.m., could easily throw this out the window, but I would just watch the major, like if you're watching daily charts, obviously your break is here over 296.50 or under 289.75. That's the lows that we respected yesterday and the day prior. For the more nuanced traders, your spike base is here at, what is the number? 293.80. 293.80, 293.80. If we're above that, again, bullish outcomes on the table. If we break down underneath that, look for the lower high and then rotation underneath to the pullback level from the morning breakout. That's going to be at 292.34. 292.34. Okay, so those are the nuanced levels, but daily traders, you just care about this and this. Next up, IWM Russell 2000 and the small caps, keeping this going right along. Notice that boom here, we can see it clear as day, the break of the daily range on this chart. So bullish on the weekly, giving ourselves a higher high here. That's definitely a step in the right direction. Your spike in the IWM is anything that stays over 191, 191, 191, 191 in the IWM. Anything above that remains optimally bullish, looking for continuation. We have put in a couple days of consolidation and finally got the break yesterday. So could it just go here? It could. It definitely could. And the weekly expected move has some room to run up towards that high at 194.75. So again, market may seem like it went on some overextended rally yesterday, but expected move in options hedging, it's not. It's telling us we still have some upside left in the tank. So don't discount the fact that we could continue higher here. Once again, want to be very, very clear in today's stream. At 2 p.m., everything goes out the window. We're flat at 155. And we're watching to see what the reaction is from the market at 2 o'clock, and we're responding to that volatility. Maybe once the dust starts to settle at like 2:45, when Jerome Powell's speech is well underway. If you're, if you're a madman and you're out there scalping it, all the power to you. Do whatever works for you, but be mindful of your risk, please. Size down the position. Although you could make a boatload of money, you could also lose a boatload of money, and it's all about managing risk in this business, and closing off that risk window when it doesn't make sense to have it open, basically. So, just be, if you're going to trade the 2 p.m. announcement, just be careful is all I'm saying. What I would say is, for most traders, as you mature throughout your career, not to say that anyone's particularly immature or mature or whatever, it doesn't really matter, but as you get further and further through your trading career, you realize you don't want the headache of this. You don't want the stress of this. It doesn't make sense to open up, yourself to that type of risk if you could just wait a day and then hit it hard on Thursday as the market reacts and digests the information, and we get some more cleaner trending type moves that are not subject to so much volatility. So once again, just one of the main points that I want you to take away from today's stream is that we've done all of this analysis, and things look good from the bullish perspective. The structure is great. You would probably have a bullish edge if it wasn't FOMC day, but all of that can be wiped off the table if the right sequence of words are said from Jerome Powell. Any little sense of hawkishness from him, if he continues to reiterate that, hey, market's not pricing in the continuation of rate hikes, that's absolutely wrong. We're going with a, 25 this meeting, we're going 25 next meeting, 25 after that. This is going to continue for the most of 2023 till target rates, get up towards 6% or something like that. Market's not going to respond favorably, right? Market's not going to respond favorably. And it's not our job. Let's also point this out. It's not our job to really, tell the Fed or interpret what the Fed should or needs to do. Our job is just to respond to what the Fed is doing, what the Fed is saying, right? If you're an investor and you have like a 6 to 12 month time horizon, then fine, I get it. You can sort of, position yourself based on the impact of the Fed on the market and what's going on there. But if you're a trader, it doesn't really matter. It really doesn't matter. It gives some context to what's overall happening, but we don't want to get wrapped up in the weeds of that, so to speak. So we've gone through the broad market. I'm going to go lightning round through this and just point out if anything catches my eye from the core listed companies. Apple opening towards the highs, probably the most, well, I can't say the most because we've just started, but looks bullish opening towards these highs for a breakout here just to retest the highs at 145.25, top of this range 146 maybe. So Apple looks good as consolidation moving back to the top, and a break here. Again, everything goes out the window at 2 p.m. Next up, Netflix. Netflix does not look as attractive because it's still flirting with this 352.50 area. It tried to hold on to it yesterday, just not clean and opening inside the chop. So Netflix, not so much. Tesla, opening on a slight gap, not quite, just right at the prior highs of day. So it closed the gap yesterday, accepted right here. I would just watch this level here at 173.30. 173.30. All right. So if Tesla opens above, stays above, you could see continuation squeeze in the upward direction. You've got thin structure on the way down. That would be bullish. Falling underneath, neutral, wouldn't want to touch it. So watch 173.30 in Tesla. Let's go Google. Still inside the choppy range on the daily chart. So here's the range. There's the other range, right? So it's really at this point got to be a break here or here. Really sloppy towards the middle. Meta, what's going on with the fantasy land? Holding up, but once again, just like Netflix, has to resolve this 149 area. Choppy day yesterday, not learning a whole lot there. We've got earnings after the close, so probably going to get juiced up options premiums. NVIDIA, tough here because you've got a larger range and you're in the midpoint of that range. Almost like Tesla, you might just want to watch 197 for a possible breakout level, right? You've got thin structure here to possibly keep an eye on. Microsoft, close the gap, opening on a slight gap up here. I think the fact that Microsoft's putting the pressure on Google here is probably it strikes me as why this is probably outperforming. So what you would want to see here is a retest of the gap, high or low, respect this high, respect the spike, right? Because technically this is still a spike like everything else. 246.85, 246.85, high or low pullback above that, good to go on Microsoft. If we fall back further into the prior day's range, kind of concerning. We're back in that chop zone here. Last but not least, Amazon, the mini beast. What do we see in Amazon? Making that high at 104. This was a great trade. If you were watching Amazon yesterday, this was one of the watches we had early in the Discord. So kudos if you caught Amazon over the hammer high. For this morning session, opening in the consolidation, just, map your consolidation. So 103.16 offers a break to, possibly test that gap or underneath the lows here at 102. You're just looking for that retest of 99.27 again, and hopefully we get some sort of higher low pullback and we hold up outside of the balance here. building a step in the upward direction. Okay, so 102 and 103.16, 103.15 are the levels in Amazon. All right, that was the speed round through the core list of companies. I hope everybody has a green trading day. I hope everybody stays, staying safe is so, it's become such a cliche given what's been going on in the world for the past 2-3 years. Gosh, has it been that long? 3 years already? So seriously, let's put it this way: be responsible at 2 p.m. All right, be responsible to yourself. It's not about me. I could care. Well, I actually could care. I do care that you don't blow up your account. I mean, personally, it won't really affect me if you blow up your account. But I would hate to see that happen to you. But be responsible for yourself. If not for me, do it for yourself. Don't blow up accounts. Don't do anything silly at 2 p.m. Stay in the game as a trader as long as you can. And you do that by not taking silly risks in volatile environments that are binary. Market could go up, market could go down. We don't know. All right, so I'm going to leave it off at that. Join the Discord if you're not in there already. It's completely free to join, linked down below here. If you're going to tune out, that's great. Do me a favor and give the video a thumbs up on your way out. Probably going to wrap it up at that. No sense in doing the first 15. The market's kind of just staying in its little spike here. We'll give you an update video after the close today. All right. After the close today will be the midweek market update as regularly scheduled. I hope everybody has a great one, and I will see you in the next stream.